Hey everybody, this is Jose here. The countdown is almost about to reach 0, so we are about to start. Could you please confirm on the comments box that you hear my voice? Just type a quick hello, yes, anything, so I could understand that you hear me well, because I also know that you see my screen, so that would be what I need to know, so we can start. Very good. Very good, everyone. Wonderful. Well, so let's get started. Okay, everything is ready to go. Market opening hours approaching. Slides are up, TradeStation is running, and the AutoUFOs are also processing in the background. So we are ready to get started. So welcome to the session. Today is March number 5, 2019. My name is Jose Blasco. I will be your instructor, your guide in this short-term session today. We are doing AutoUFOs get together today short term. So we'll be focusing on futures markets and Forex. We'll be looking at smaller time frames and identifying opportunities for intraday trading. Okay, that's why we call it short term. But before we start, quick reminder of a disclaimer that you have seen before, I'm sure. Just in case, the following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used on this video is purely for demonstration purposes and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. So I think that we should run a little competition here where you guys time me to see how fast I can go to read the disclaimer, okay? And the day I beat my own mark or something, we do something special to celebrate, okay? Anyway, getting serious now, trading time, my friends, okay? So we have the AutoUFOs in front of us. Nasdaq is what I have loaded on my chart. The symbol, you can see it on the upper left, NQH19. The time frame, 2-minute time frame. Let me point at a couple of those things, okay? 2-minute time frame. The symbol is the Nasdaq NQH19, okay? And below, we have another chart, still looking at the Nasdaq, but notice how in this time we are looking at the 5-minute time frame, okay? That's a little mistake I'm just identifying I'm making here. Let me correct that quickly. It should be the 15, okay? Here we go, 15. Let me pull a document that we have been using in prior sessions to make a few notes. So I will use this document as a little bit of a reminder for everybody, and in case you have not been in our sessions before, so and you are new to our session, so this could also help you understand a little better some of the things that we do. And what I wanted to get here in front of us is the list of timeframes that we're going to be using, okay? And the 3 timeframes that we're going to be using, we will focus on the 3 on the top, which is the 15 minutes, the 60 minutes, the 240, combined with the 2, the 5, and the 15, okay? So I just made a little mistake starting the session where I typed in the bottom chart 5-minute time frame instead of 15. So this has now been corrected, okay? And we are going to be following the initial combination that we have on the top of our notes, okay? 15-minute time frame and 2-minute time frame. This, it's not adequate for Forex trading. And the reason why it's not adequate for Forex trading, it's because Forex trading, spot Forex, it's a non-centralized market, and different brokers may give you different quotes. So a 2-minute time frame is just a little too tiny. If you compare charts from 2 different brokers, you may see a little bit too much difference in the prices in a 2-minute time frame when it comes to what is the upper part of the UFO and what is the bottom part of the UFO. And therefore, for Forex, it would be recommended, for spot Forex, it would be recommended to at least use the 5-minute time frame as a minimum to avoid, this very small distortion of price, which is a normal, natural consequence of Forex markets being decentralized. Now, a different story is if you use currency futures. Okay, if you use currency futures, then it's a different story. and then it's okay to use the 2-minute time frames. But if you use spot Forex, maybe I should add the word spot Forex here, okay? If you use spot Forex, that's when I made that recommendation, okay? So we start the day looking at equity index markets, okay? Equity index markets, we're gonna start with the Nasdaq. And therefore we're going to be planning a trade on the Nasdaq, the S&P. We'll start with those, okay, and then we'll move into spot Forex as well, looking for opportunities in a collection of different time frames. I have a question here from Fernando, so let me show it on the stream. So Fernando says, curiosity, why not stocks for short term? Is it because the AutoUFOs have more efficiency or liquidity products? Actually, it's not the case. You could certainly, Fernando, you could certainly use stocks for intraday trading. You could certainly look for stocks that are very liquid, like, you know, let's say Microsoft, for example, is a very liquid stock. And if you look at the 2-minute time frame of Microsoft and below, you look at the 15-minute time frame of Microsoft, that is the performance that you get. It's just as good. Okay, 60+%, it's just as good as a performance. The reason why typically for short-term trading, most traders will end up using leverage asset classes such as Forex or futures. It's precisely because of the leverage component, where with less money, you can get into greater size trades and therefore produce bigger profits with less money, while you manage your risk because you always use stops. So leverage in that case is not going to be problematic because we always use stops. If you were to not to use stops, well, that's a different story. But we do use stops because we are professional traders, isn't it? So that's the reason why. But Fernando, if you have any interest in identifying opportunities to trade stocks intraday, we can certainly do that too. The only thing is that you will need, which could be your case because every trader is different, but you would simply need to understand that you need more capital in your account to be somehow productive, okay? Because, you know, if you're going to catch a few cents move and you're going to do it with 100 shares, and I'm not saying that's your case, but it could be the case of another trader in the room. So the performance of this trade would be very disappointing, okay? 100 times a few cents is very little money, okay? Where if you were to do with the S&P, you just catch a few points, okay, or even a few ticks, and we are talking about a different story now, isn't it? So anyway, I also have a question here from London Trader. And I also have a question from Basha. So I'll be with you in just a second, Basha. So let's get London Trader question first, since I copied it first. So here's the question in the stream. So London Trader says, hi Jose, finally I could join live. I'm happy to see you, my friend. Could you show us how to plot the 15-minute time frame, 9 EMA on the 2-minute time frame chart? Absolutely. Okay, so again, this is trader's preference. Okay, this is trader's preference. Some traders prefer to have different time frames in different charts. Some traders prefer to have same let me rephrase that, same window, same chart window with multiple timeframes in or within the same window, I should say. So for example, London Trader is suggesting, okay, what if I could have the 15-minute time frame on a 2-minute chart? That would be very convenient, and indeed it would be. And by the way, I have a news I would like to share with you after I explain this. Okay, so what am I doing here? I just right click, okay, watch this carefully, London Trader. I right click on the screen, insert symbol on my upper chart to add the NQH19. So what happens now? I got on the top my 2-minute time frame with the UFOs, and now on the bottom part, I got the 2-minute time frame without the UFOs. So what else am I going to do now? I'm going to double click on the bottom chart. So I get to change. Okay, notice that you have 2 drop-down menus here. Okay, yeah, when it comes to symbol. So notice that I could now go ahead and make this one to be 15. If I do that, now in the bottom part, I got the 15, and on the top part, I got the 2. What else can I do? Well, I could right-click and insert analysis technique. Okay, and now I will select moving average, exponential, okay, 9, and notice that when it comes to applying base study on number 1, NQ 2-minute time frame, or based study on number 2 NQ 15-minute time frame, which is the one you want. So if I do that and I click OK, now I got the average. And just to make it equal, let's go ahead and change the color. We'll make it purple. Okay, just a little thicker, just like it's below. Okay, look at beautiful moving averages. It's the same one as before, but it happens to be in the same window. And now what you could do is just drag it on the 2-minute time frame, click OK, okay, and let me see, because sometimes these adjustments, scaling, no axis. I want it same as the underlying data. Sorry, not same, right axis, exactly. That should do it. Okay, so here we go. So the moving average now is pointing at, interesting. So there is some problem here going on. This, I believe it's because it's an exponential moving average. I mean, if you think about it, you know, the closing price of this candle is 53. Okay, but if I put the mouse in there, it's giving me a little bit of a distortion between the average and the candles. Let me double check something here. Okay, right axis. Okay, and for the average, right axis. It's interesting. It's not allowing me to do something that should be easy to do. So format data number 1. Let's make it scaling right axis. Okay, it needs to scale to right axis. So the moving average and the candles are in the same scale. So the average falls where it needs to be. Okay, which is what, for whatever reason, is not happening on my screen. So second, let's make it hidden. I'm gonna hide the second. Okay, and if I close this, interesting. Something's happening here, guys, and I think it's probably because the 2-minute time frame is probably because the moving average is exponential, and for whatever reason is creating a distortion. To be honest, I have never done this with an exponential. I have done it many times with a simple average, not with an exponential. But anyway, I'm gonna give you a solution. Just give me a second. I just want to make sure this is not the reason. Right click, moving average. Yeah, it's very weird. It's not allowing me. It's only allowing me to plot one, either the average or the price symbol. Okay, so I failed at giving you a solution, London Trader. In my mind, it was going to be easy in the sense that with a simple average, it works just like the way I did. But for whatever reason, when I try to do it, with this exponential moving average, notice how the average is pointing at 71.48, where if you look at the average price, and you can see it below as well, is 71.52. But even though it's 52, the value of the average is 52. On the right, it points at 48, as you can see. Okay, so there you see, and as I move the chart, there is a distortion. The average is moving around. Okay, so I'm not sure why this is happening, guys, and therefore I'll have to give you another solution. Okay, so here's the other solution. Okay, here's the other solution, and it's not going to be a solution for today, but it's something I was planning to do anyway. So you just motivated me to do it sooner, London Trader. So what I'm going to do is I'm going to develop an indicator for you guys that does this automatically, and we'll put it in the App Store of TradeStation, but we'll make it a free indicator, so all of you can download it and can use it, and there will be no subscription for that one. Okay, so that way you can do it yourself, and that's it. Okay, you don't need to to be messing around with a problem with the scaling that I just had right now. Okay, that's it. That's gonna be the solution. So just bear with me. Give me a little time, and I'll develop that, and I will let you know when that's done. Okay, we'll put it in the TradeStation App Store. Anyway, the next question we had here was a question with Basha 78, and the question is, does it take account if the UFOs are trap? Okay, so would you mind to elaborate a little more on your question, Basha, because obviously the word trap may have many different meanings when it comes to trading and investing, depending on your school of thought, depending if you're a technical analyst or you have studied order flow, or what is it exactly that you are meaning with traps. Okay, so if you don't mind to elaborate a little better what you mean by trap, then I would be able to give you an answer. Okay. Good. Anyway, so back in the charts, okay, we are looking for market opportunities. Okay, it's 10:15 on my side of the world, which is Singapore. 10:15 p.m. is 9:16 a.m. in New York. So this prior candle, as you can see, closed below the average. Okay, this prior candle closed below the average. So technically speaking, if you follow the process that we have been describing in many other sessions in prior to today, we are technically in a downtrend, and you will want to get short using UFOs lining up with the moving average. Okay, and it's kind of like this trade is already happening. This is already bouncing from that UFO, so we are a little late to the party with the Nasdaq. Okay, and by the way, that UFO may be a little above the average instead of lining up with the average. So probably this is not a valid trade. So what I'm going to do is, before I change timeframes, I'm going to change symbol to ES1, ESH19, which is the S&P 500 futures. Okay, and remember the set of timeframes that we are looking at here. So I am applying this to, I just applied it to the NQH19. I am now applying it to the ESH19, and we have a similar reading when it comes to the trend condition. The prior candle that closed 2 minutes ago, because it's a 15-minute time frame, so every 15 minutes you have a close. The prior close took place below the moving average. Okay, and therefore our job would be to short that market, attempting to catch the trend continuation movement that is likely to happen, but that is only likely to happen if you were to have red UFOs, especially if they are lining up with the average, which at this moment in time we don't have. Okay, probably, I mean, there was a UFO there a little earlier. So if I was to change this to false, the setting of my UFOs to false, well, as you can see, there have been UFOs, and you could have taken a trade, somewhere around this candle, because 30 minutes ago, this candle did close below the average already. So when price came back up, it would come back into any of those red UFOs, and you could have taken the trade and be on a trade right now. But again, this has already happened, and therefore is not a trade that is a valid one for us to plan. I'm just showing you just to clarify what I'm going to be shooting for. Basha, you are talking about, got it. So when you talk about traps, you are talking about Globex high and Globex low. Well, let me tell you one thing about that. And again, it's certainly a very valid methodology to trade against the masses, and that would be exactly, now I understand what you mean when you said trap, because you are looking at the Globex high and Globex low, which is the higher price that was traded overnight, the lowest price that was traded overnight, and you want to trade when price is either above or below that. Now here's the issue. So let's say this particular point in the chart, okay, let's say this particular point on the chart was the Globex low, right? And let's say price drops and drops right inside this UFO, which is below the Globex, right? Because this would be your Globex, correct? So what should you do in a case like that? What you should go long. This is what you would do. And by the way, probably this would be a valid trade. Okay. But what's the issue? Well, the issue is that this approach would not align well with the methodology that we have been exploiting when I use the UFOs EML Lab workspace. The methodology I am exploiting, and you can see the name of the workspace down here, in case you haven't noticed, okay? Down here, okay? Maybe it would be better if I use a square box instead of a round, right? So this is your UFO EML lab, and what we're doing here is to follow the trend. Now, by definition, if price went far away, piercing the Globex low, the Globex high, it means you're in a downtrend, and the Globex methodology will tell you to go long, which again, I'm not saying is a bad idea, I'm just saying it's a different methodology. Okay, so based on what we're doing at this moment in time, we will not be executing that trade. Okay. And if and guys, if many of you are trading Globex, just let me know. Shoot us emails, and we can do special sessions to do the Globex trades. Okay, and I'll be happy to do that. By the way, there are many other setups that are just as good as Globex as well, right? Following the same concept. Okay, it doesn't need to be Globex, especially if that time of the day doesn't work well for you. There are other ways to replicate the same type of methodology at different times in the day as well, okay? Or if you want to take more trades per day too, okay? So we can also do that, okay? And just shoot us an email if that's the case. Mark, let me see. Mark has a comment. So here's Mark comment. How are you, Mark? Good to see you. There is a TradeStation index called DTX Globex with inputs a shading of the Globex timeframes on the chart. Oh, that's so cool. That is so cool. Yes, very good. Yeah, thanks for sharing that. Yes, you meant an indicator. I get it. Yep, very good. So anyway, so let's continue. And so what we're gonna do, since at this moment in time, and remember, at this moment in time means now. And now, when using this methodology, now changes every 15 minutes. Okay, anyone would like to write on the comments box, why did I say that? Why is it that every 15 minutes something special happens? Anyone would like to please go ahead and type it? Okay, I would love to see you giving your view about what I just said, and that way I would make sure you followed prior explanations too. Okay, so everybody please type on the comments box why every 15 minutes is the new now. Okay, you guys go ahead and say that. Okay, so 15 minutes from now, well, every 15 minutes to be precise will be 8 minutes from now, which is every 15 minutes on the clock. And therefore, what I'm going to do in the following 8 minutes, while I'm waiting for you to type it on the comments box as well, okay, because only very few of you have typed it, and I know you know it, so please go ahead and don't be shy. What I'm going to do is change my set of timeframes and look for similar opportunities, which may be long or short, with the same markets, the S&P and the Nasdaq. Okay, for a few sessions now, we've been focusing on the S&P and the Nasdaq, and we'll do that for a little bit until we get everything under control. Okay, and then we'll expand the list of markets too. Okay, you'll see in the following months how we'll have much more structure on many of the things that we do. And you may have noticed that already. We started doing 1 session a week, then 2 sessions a week. Now we do 3 sessions a week. So, we're going to add many more things, okay? But in any case, what you could do is switch time frame to look for the same type of setup in a different time frame, because if you change time frame, you will find slightly different stacks of orders in slightly different places. And also, very importantly, you will find different readings for the moving average with potentially would indicate other opportunities that you may be able to execute. Okay, so this is what you would do, right? And let me take a look at your responses here. Yes, absolutely, guys, you did it very well. Well, I have to say it was an easy question, correct? That was not too tough, okay? Just a little bit humor here, but very good answers, guys. For example, let me share the one with Chris. Okay, Chris said, candle form every 15 minutes. Exactly, right? So every 15 minutes, that candle closes, and therefore you have a new now, in the sense that if you had closed below the average or above the average. Okay, you now know where you're at. Okay, so that's the definition of the new now. And when you're using the methodology where you combine the two, give me a second here. I was pointing at the wrong screen. When you combine the 2 and the 15, the new now is every 15 minutes. When you combine the methodology with the 60 and the 5, the new now is every 1 hour. When you combine the methodology with the 240 and the 15, the new now is every 4 hours. Okay, and therefore that's what you would do. So right now I'm looking at the S&P, 5-minute time from above, okay, and I have the 60-minute time from below, okay, as you can see. So the new now is defined every 1 hour, and the last close, okay, was defined as you are in a downtrend, so it's time to short, and for you to short, you need a red UFO in the 5-minute time frame lining up with the average. What's the problem? We are above the average, and there is no UFO right now. Again, a few candles ago, I'm pretty sure you could have got into this trade, and again, if I go back to highlight this, right? So what did you have here? A few candles ago, right? Well, you had an opportunity to enter right here, right there, with the blue dot, right? Right there, you could have entered, okay? And if you had entered right there, when would that be in the bottom chart? Well, take a look, okay? Take a look. When I put my vertical line on this place on the chart, it shows on this chart, right? And this chart is after the prior candle has closed below, right? Closed below the average. And this price level is more or less around this area. So you would have taken the trade in the direction of the trend where the sell on field orders were, where on top of sell on field orders, you have potential new buy on field orders added by AI, okay, which is, well, went a little too far with AI. A moving average is a very simple thing, but somehow is AI because computers use them dynamically. Computers use them like us with the UFOs. Okay, so it's not only the moving average, it's also the computing power, the thinking power of those computers, which it's kind of fancy to call it AI. Okay. So anyway, if you had taken this trade, okay, what would happen? You would have made this type of profit. This would be enough for you to remove the risk of the trade by scaling out half of the position at a target one, and now you are left with whatever's going to happen, and whatever's going to happen may lead you to your final target, and you made a beautiful profit. And why is that? Well, because you got everything together, your average, your UFOs, all those things, okay? So that's what we're going to do in every one of the time frames that we look. So with the S&P, we don't have the opportunity, but what about with the Nasdaq? Okay, well, with the Nasdaq, we have the same setup, but we are above the average now, and we don't have red nearby, so we don't have an opportunity with the Nasdaq. We don't have an opportunity with the S&P. We did around I don't know, let's call it 20 minutes ago, but not now. Okay, so no need to rush. Let's plan for a new trade. Okay, and since the clock will tick 30 in 1 minute and 10 seconds. So what I'm going to do is I'm going to get prepared for that by switching to the 2-minute time frame and the 15. Okay, and look at what's happening. Look at what's happening with the Nasdaq. So it seems that we're going to close above the average. So it seems that we are having a trend reversal in this time frame. We will need a green UFO, which we don't have on the Nasdaq. So what about the S&P? I'm just anticipating what's about to happen because it's about to happen in 30 seconds from now. Why? Because I'm looking at the clock. Okay. So, and if I switch to the S&P, we don't know yet what's going to happen when it closes. It may close above, it may close below. So we will know that in very few seconds, 25 seconds to be precise. Okay, and we'll see what happens. But in any case, we are not having a green UFO nearby that would allow us to enter this new trend. Exactly. So we just had the close above the average. Okay. So finally the close took place above the average. So we end an uptrend. So what we are lacking here is on a green UFO. Okay, and you can see how price coming to this price level, it's reacting and going back up, which it's those computers, kicking orders in thanks to the average. Okay, again, that's not enough for us to have a profitable trade. That's helpful, but it's not enough. For us to have a decent probability, we also need the green UFO, which unfortunately in this time frame we don't have. Okay, so no worries. We're just gonna go back to the next set of time frames that we have ready for us here, which is the 240 and the 15, and we'll plan a trade there. And if we don't, then we'll move to Forex, and then 15 minutes later we'll come back to the equities. And this is how you spend your trading time when you do intraday trading. You just keep going from market to market looking for opportunities. When you find it, you take it. And if you don't find it, you keep changing time frame or market until you find it. Okay, but you are always 100% disciplined. Okay, because we are professional people here and we never break rules or improvise a trade. We follow the plan. That's it. So 15-minute time frame on the upper part for the S&P, 240-minute time frame on 240-minute time frame on the bottom part for the S&P. Okay, so I'm looking now at the next combination of time frames. Okay, so where are we at? Well, we are at a point, same story. It's kind of a different picture, but same story, where the prior close was below the average. Okay, and again, probably this would be maybe a couple of hours ago, you had an opportunity to enter short. And if this keeps going, probably you're going to reach this UFO, and it's going to be a beautiful trade that may take a few hours. Okay, that would be still an intraday trade, but given the fact that now I'm looking at the 4-hour and the 15, well, now you would put yourself in the shoes probably of a trader who's going to be in a trade for a few hours. Okay, still intraday trading, unless something like that happens, which could happen, where the market went down in like 1 hour. It was so many points, which is it's doable and it happens, but it's more rare, if you wish. Normally, you get more of what we have in the center part of the screen. Okay, this is what would be more common. Okay, so no S&P trade. What about the Nasdaq? We'll move to the NQ. Okay, and let's see what we have here. So the prior close was below the average. Okay, same story. So what we need is red, and unfortunately, what we have is green. Okay, so no trade with the Nasdaq, no trade with the S&P. So what do we do next? Move into the world of currencies. Okay, so by the way, let me check. I'm missing some comments or questions here. So very good, very good. Yes, good comment as well from London Trader. Let me get your comment on the main screen as well, London Trader, because that's the right mindset. Okay, and again, we are a diverse group of people getting together to trade together here. Some of you, have been trained on technical analysis. Some of you are expert coders. Some of you love the fundamentals. Some of you trade futures only. Some of you trade stocks only. Some of you, everybody's a different story. Long story short, right? But the one mindset that we need to be the same for all of us, no matter our preferences on how we trade, is to be mechanical. And that's why I'm having London Trader's message on the main screen, because that's the key. If whatever you do, good or bad, you do it mechanically, you get consistent results. Of course, if what you do is bad and you do it mechanically, you get consistent bad results. So you don't want to do that. That's why we are putting methodologies in place. But the moment you have a good methodology, you need to act mechanically to have this consistent action, creating consistent results, right? So the word mechanical is a word that we love so much as traders, right? And now the definition of the new now is mechanical. It's not like, okay, more or less now, let's go for it, right? So that would be subjective, and that would lead to random action instead of mechanical action. Okay, good. Probably you have heard me say that before. So let's move into currencies. Let's begin with the most important currency pair in the world, the euro against the US dollar. So what do we have here? Well, we're in a downtrend in the 4-hour time frame. Okay, we're in a downtrend, and therefore looking for UFOs on the 15. The UFO that we found is located at 113.54, and 113.54. It's more or less here. So it's kind of like somewhere around this area, right? And in other words, if you were to short using this red UFO, even though it's a valid UFO, Okay, actually it's the dark color UFO, so it's a nice one. But on top of that, the problem, if you're using these methodologies, is that you would be, probably trading as you have a trend change, and you are shorting in what is about to become an uptrend. Okay, so we're gonna have to be patient with the euro, and therefore we are gonna move to another currency pair, which is the Great British Pound. So let's take a look at the Great British Pound. Notice how I'm still using the 15-minute time frame 240 combination. Later, okay, later I'll go back to the 65, okay, and in 10 minutes from now I'll go back to the equities because it will be the new now. So I'll go back to futures. Okay, so I got 10 minutes to look at spot Forex trades. 1 second, guys. Good. So what do we have here? Well, we have a trading setup, which I would say looks much more interesting here. Okay, why is that? Well, because in the 240-minute time frame we have this downtrend. Okay, price seems to be coming up, which is needed for us to be able to short because we have a downtrend. And again, when you see me using the UFOs EMA lab, then I care about the trend. Okay, other methodologies may not, which is absolutely fine if the methodology implies that is fine. Okay, but in this methodology, I want to persist and insist that is not the case. So what are we trying to do? We are trying to get short around the average price. The average price for the Great British Pound US dollar happens to be 131.69, and exactly at 131.69, from 131.69 to 131.80, okay, we have a beautiful UFO waiting for us. Okay, so what would the plan be? Well, the plan B would be to wait for these to come to the UFO so we can take a short, expecting this market to fall down. Why would we expect the market to fall down? Well, because we are in a downtrend, and if we were to short at that price level, we have the magic of the red UFOs combined with the potential new set of unfilled orders kicking in because those computers are adding unfilled orders. So it's like let's call it a blue UFO, right? So let's call the computers adding blue unfilled orders, right? So you have the red unfilled orders waiting to get filled together with the blue unfilled orders that have not been added yet, but potentially they could be added like they were added here. Okay, you see that? How price hit that level and from there reacted and started moving down. Or again, here, very close to the average, how price stopped and started going down. All those things, of course, are not a coincidence. Okay, of course, the UFO itself is the real key. Without the UFO, forget about the average. But when you have the two combined, you got two forces pushing the same direction, and that in trading means probability. So let's plan on a short on the pound. If I was to plan on a short on the pound, I would want to short around this price level. So that would be my short entry, okay, around 131.69. Okay, that would be my entry short. Of course, I cannot short naked and hope for the best. I need to use protective stops. Okay, so I am typing in the wrong place on the screen, but let me correct this. Here we go. This is the right place on the screen. So you will be using protective stops located above the UFO, which is 131.80. Okay, that would be your protective stop. Okay, and then of course, then you will have a final target that would be much lower. Okay, in this case, we're gonna shoot for that final target to be located all the way located at 130.86. Okay, that would be your final target. And why is that? Well, because you have the green UFO, which is it's better to respect. Okay. Now, in the meantime, it could be very, very useful and very, very common to go ahead and somewhere in the middle of this move, set up what we call a safety target, where halfway into this move, you could scale out half of the position. So I need to calculate that. And the reason why I'm not typing a figure yet for the safety target is because we are dealing with spot Forex. And what does that mean? Well, earlier I said that spot Forex means that this market is decentralized. And what does that mean? Well, it means two things. Number one, different brokers may have different quotes, slightly different quotes, but different quotes, that which is a concern. And situation number two, or consequence number two, is also the fact that the data we get on the chart that is coming from the broker, where every broker has a different quote, that data, as I just said, is coming from a broker, meaning is not coming from an exchange, right? And because it's not coming from an exchange, well, no one registered the prices at which those trades took place. If someone had registered the trades, which is an exchange, then what you will get on your chart is what is known as the last traded price every tick. So in trading, you have three prices, right? The bid, the ask, and the last. So what is the last? It's the last trade that was reported and registered by the exchange, right? What's the problem? There is no exchange, so there is no last. There is no last in Forex. I mean, there is a last, but for every broker is different. So there is no last chart. Therefore, what do you chart? Well, when you chart Forex, you don't chart the last. By default, what trading platform will give you is the bid price. And the bid price, okay, the bid price is what you get when you sell, because you sell to the buyers and the buyers are bidding. So when you sell, which is short, okay, when you sell, which is short is sell, then you get the bid price. So if the bid price on the chart is showing you 69 and you got your entry at 69, it's perfect. It's perfect. But what about when you buy? Your protective stop is a buy order. Your safety target is a buy order. Your final target is a buy order. When you buy, you don't buy from the bid, you buy from the ask. And therefore, these price levels of 130.86 are not good. So I need to change my GBPUSD ticker symbol to GBPUSD.A. Take a look at the upper part of the screen, guys. This is very, very important. Okay, so it's loading. Just let's give it a second, but you will see it's very, very important to avoid stop outs. And if you look at the upper part of the screen, here you can see the symbol I was talking about. Okay, and more specifically with the .A. Okay, we added the .A. Okay, GBPUSD.A. So what happens? Well, now you can see the top is 82. And the bottom one that was 86 is not 86, it's 88. Okay, so 88 and 82. So I'm going to have to go back to my chart and change my my prices to 82 and 88. Okay, so my stop needs to be above 82 and my target needs to be at 88. Now, notice what I said. My stop needs to be above 82. So let's make it 83. Okay, that will be the way to do it. And if you do that, let's bring a calculator into the equation here. Okay, if you do that, okay, 131.83 minus 131.69, this is 14 pips of risk that this trade has. If you were to project to the downside, you were to project this price, you would reach 131.55, and therefore that's going to be your safety target. So here's the plan, my friends. Here's the plan. Feel free to take a screenshot. I'll give you just a few seconds here for you to take a screenshot, and we'll move into planning a new trade. And we are ready to take it. Okay. Milan, we can also short BP futures. Is it the same chart? Correct? Yes. Very good point. And if you were to do the trade with the BP futures, okay, you will end up with slightly different price points, and you don't need to look at the bid and the ask because it's futures. You have an exchange, so whatever you see on the screen is valid. Okay, whatever you see on the screen would be valid, and it would be taken by you. That's it. Okay, good comments, good questions, guys. Is everybody following? Everybody, could you please give me a little feedback, a little confirmation, just so I know that you follow the rational trade. I just want to make sure that, I mean, not only you got the peak, it's good that I share with you a few of those GT peaks. You know, why not? But what I would like you to do is to be able to replicate that on your own as well. And therefore, what I care about is that you got the rationale about how we did this. Okay, so please go ahead and confirm that for me, so that way I know if I need to reinforce something or I'm just going to be happy to see that the session has been useful for you. Good. Thank you, guys. Yeah, very good. And also, guys, remember, we are here to learn, so please don't be shy to ask your questions, okay? And I will add one more thing. Remember that when you give me your messages, okay, as long as you do it via eyes on, only me see your messages. If you post your messages on Facebook or YouTube, obviously everybody can see them. But if you have something a little more private you want to ask, or there is a question that you feel, you know, I'm okay, but I'm not sure. But at the same time, I feel maybe it's a basic question. I don't want to slow down the group, whatever. Just make sure you don't need to feel shy about it. Just ask me the question. And if it's a good question, I'll give you an answer. If it's not a good question, I will let you know so you can shoot me an email and answer that question offline. Okay? Not a problem. But don't be shy, guys. Oh, good point, Mark. Good one. I love this teamwork. So, Milan, you were asking a very good question earlier, but take a look at Mark's observation. Okay, I am getting Mark's observation on the main screen here. And Mark says, may not work in futures. The EMA may be beyond the red UFO. Okay, so careful there, because Forex futures is a very relevant market. Okay, and again, spot Forex is a bigger market and is traded more heavily than currency futures. So, you know, it would not be crazy to take this trade, Milan, because you have the confluence with the spot Forex markets, and this is likely to impact the currency futures. I mean, very likely. But Mark got a very good question too, because, you know, you may see price go just a little higher to hit the computers that are trading the futures, the currency futures, instead of spot Forex. Okay, so you never know. So actually, if you want to be extra perfectionist and be extra safe, it would be good to put both charts next to each other, because Great British Pound spot Forex and British Pound futures is a market that trades at a different price, but it's the same thing. Okay, so you will want to see that confluence to make your trades stronger probability. Okay. Anyway, John Clark, here we go. We have a question here. Can you discuss what happens when price gets back to the UFO, the 9 EMA value has changed too much from the time of the analysis, and really we shouldn't take the trade since it's not lining up with the UFO. But we may not be there at the charts if we are trading longer time frames. I guess it comes with experience and time that we can predict where the EMA is going to be. Yes. Well, first of all, the answer to your question, and by the way, very good question. I love it because it also shows that you've input some practice into this. So I love it because you are realizing, hey, wait a minute, I planned this trade the other day. I was all excited. Then price was coming closer and then my average moved. Okay, it invalidated the trade. So what should you do if the trade is ever invalidated? Just cancel it. It's that simple. Just cancel it. And what if you are not in front of the computer screen and you didn't watch it? Well, then what you need to do is to trade a larger time frame. Okay, if your averages move too much, given your lifestyle, and you cannot change your lifestyle because maybe you work in an office and your job requires your full attention or whatever. So you gotta trade larger time frames, right? So instead of doing 240.15, maybe what you could do is you can do the daily 240 or the weekly and the daily, and would that pay you less? Well, yeah, because the less you trade, the less you make money. Is that making sense? But at the same time, you don't want to trade in a way where every time you trade, you are breaking the rules because you didn't have time to double check. Okay. And today, by the way, remember, we are discussing short-term trading. And therefore, the mindset I'm assuming that we all have at this moment in time is that we want to be active, and therefore we need to find ways to watch it. Okay. If not, well, in the longer term trading days, okay, which is 2 days from now, Thursday, then we'll take care of other ways to enter the market, which are more relaxed. We often talk about options. There are many more things we need to do with Forex too that we haven't done yet. Okay, so we will. Okay, but for now, the short answer to your question is use a larger time frame. Okay, I'll give you one more idea for you to experience, because in the end, as I said, I use the term lifestyle. It's so true. You know, let's say, for example, John, that technology and you are very good friends. Okay, because some people are tech savvy and some people are not. Let's say your case is that technology and you love it, right? So maybe, okay, you just set up a bunch of trading alerts. You can leave your TradeStation running 24 hours a day. You can leave your TradeStation running in a VPS, okay, a virtual private server, okay? Leave your TradeStation running in those services running 24 hours a day, and whenever and draw some lines on your chart. For example, you draw a line on your chart and you say, hey, look, whenever the pound gets to this place on the chart, okay, format horizontal line, alert, okay, enable alert, and with the global messaging preferences, you go ahead and you set up your email. So now you're going to receive an email, okay? And what do? Well, you interrupt your work activity for 5 to 10 minutes and you go check at the chart. And if you see the moving average has changed too much, then you just cancel the order. By the way, you can do that with your phone. Looking at the average and canceling the order can be done with your phone. So I would guess the majority of people in an office or other works, they could certainly take those 5 minutes to do that action, okay, once you receive the alert. So this may also help you. But again, in this methodology, like everything in life, everything got pros and cons. In this methodology, the pro is that you add probability. And, you know, a bunch of you have sent emails, okay, stating that since we started with these sessions in November last year, and you started combining this very simple approach to trading, actually, some of you even have said it's the first time in your trading life that you started making some consistent results. So it pays. That's the pro. When you add those tools together, you are adding probability. So it pays. That's the pro. What's the con? The con is that you have to watch it. And the average is dynamic. It moves. And therefore, you may have to cancel the trade. So that's why you have to watch it. That's the downside, okay? So everything got pros and cons. We'll explore other methodologies as well, guys, okay? But again, there is that much time that we spend together, okay, and we have time for whatever we have, okay, and I'd rather have you utilize something simple, powerful that helps you than getting super fancy and talk about things at the speed of the light. Not that I speak slow, I know I speak fast, but you know, don't go deep into details of things. That's what I meant. And then you are left with a lot of knowledge in your brain, but nothing is really actionable or helpful as a trader, okay? So at least that's my intention, that's how I'm thinking. And if you guys think that there is room for improvement in my thoughts, and I'm asking this in an authentic fashion, please shoot an email and let us know, because we are open to keep improving what we do to help you guys. Yeah, you can set up alerts with a mobile app as well, Mark. Very good point. Very good point. Good. So now let's go back to the charts. So we got a trade with the Great British Pound US dollar. I would like to go back to my 2-minute time frame and my 15-minute time frame, 2 and 15, and I would like to go back to the NQ19 2-minute time frame and 15. Okay, so what do we have? Okay, what do we have? Well, the prior close was below the average, correct? Let me see, close is 150, average was 152. So yeah, the prior close was below the average. So the new now that took place 10 minutes ago, it was a downtrending market. And yeah, immediately price came back to where the average was. And I'm pretty positive there was a UFO here, and this could be a trade that was executed as well, okay? But anyway, that's why you need to watch these things. I mean, ideally, when you do short-term trading, especially if you trade at 2-minute time frames, guys, okay? Of course, when I do presentations like today, I can only share one screen. That's it. But when you trade at home on your own, it would be very useful to you to have at least 2 monitors. If you have 3, it's even better. And you can set up multiple charts in front of you so you can watch these things, especially because at those 15 minutes, okay, you have this close and that dictates the new now, and immediately you may have a trade in front of you and you need to execute quickly, okay? So what do we have now? What we have now is that we have this red UFO, which begins at 47, where the average is 48, okay? Now, 48 is just a little higher, okay? And this UFO goes all the way to 62. So in other words, if this market comes back to this UFO experience, okay, and a little bit of price projection in my mind, tells me that the average is going to be lining up with this UFO. Okay, the average is going to be lining up with this UFO. And what's going to happen? Well, we have a proper trade setup. Okay. On top of that, there is not much to stop price all the way to 71, 16 or something like that. Okay. There's not much. The next green UFO is all the way there. So if this market was nice enough to retrace to the red UFO, we would be delighted to give it a shot, get into a short trade, and speculate from a movement to the downside and profit from it. So what are we going to do? Well, let's plan a trade. We have another trade ready to be planned. So protective stop. Okay, it's going to be 71, 62. 0.75. I'll just make it one tick above. So 62.5 is the top. So we'll make it 62.75. The entry, okay, it's a short entry. Okay, we're gonna make it. We would like it to be more or less like the average. Okay, especially because this UFO is quite wide. Okay, because this UFO is quite wide. So I mean, 51 would be ideal because it coincides with wherever the greatest concentration of orders are, which is the round circle within the UFO, isn't it? The problem I have with that is that the average is pointing at 49. In other words, we may not get to 51. And we are likely to go there. At the same time, we may not, and I would not want to miss the trade. So what I would like to do is, because it's 71.49, let's call it 0.5, if this market keeps going higher, okay, keeps going higher, gets there, well, the average, instead of continue the way it was, the average would go slightly higher. Okay, the angle will not be going down, the angle will be slightly higher. Why? Because price has gone slightly higher. Does that make sense? So what are we going to do? Well, this is just a little bit of a guess. You can review this as price approaches. But I'm going to shoot for 71.50 as the entry, which is a little higher than 71.49, which is the current price of the average. Okay, so that would be my expected entry for this trade. Then, same as before, we said the target, the final target, is going to be located around 71.16. That is what we said. So we have a room here to collect a bunch of points. Okay, a bunch of points. So it's like 30 points, something like that. Okay, and then somewhere in the middle, you would also want to have your safety target. Okay, safety target. Okay, so let me zoom out a little bit because obviously 71.16 is not in the right location. So let me move this a little bit to the right so you can have a proper screenshot as I have this trade a little more adjusted. Okay, I'm just scaling out just to try to put the text in a place where it actually makes sense. Okay, so final target 71.16. You could certainly go for 71.15.25, which is the middle part of the circle. Okay, but I'm just going to take it a little more easily. Also, we just had a close, okay, and therefore we have a new definition of the now. So the now had just defined itself a few seconds ago. So now is 48.8. So again, still looking good for the plan that we had, okay? So still same value for the average. And if the market goes up, the average will move up a little bit. So I'm still going to maintain my entry at 71.5, okay? So if the stop is 71.62.25 and the entry is 71.50, we're talking about 12.75 points of risk. So if I was to project this to the downside, starting at 71.50, that will give me a safety target of 71.37.25. 71.37.25, is that what I said? Yes, and that would be the plan for the trade. Oh my God, I'm just being too slow here. We should be in the trade as we speak. So let me go ahead and get the trade in. I'm activating chart trading. Hopefully I'll still have time to do it. Maybe you want to do this with me, guys. If you do it with me. Oh, guys, I have bad news. We just had a trade session crash the moment I activated chart trading. Yeah, sorry, guys. This is the worst time to have a crash. A trade session crash. Let me restart immediately, and hopefully we can still execute this trade. Anyone took the trade? Any one of you had the chance to place the order in the system? You know, this is what happens sometimes. You know, you spend time explaining all the reasons why you do whatever you do, and yeah, so it's trading. Anyway, good news. The market is open for many more hours. You can replicate what I just did many more times until the end of the day. So realistically, it's not that big as a deal, even though I would have preferred this not to happen. So I'm restarting trade session on my other computer screen, guys. So you will see my charts in just a second. Just bear with me, guys. Okay, almost there. Just loading the workspaces, just loading the last workspace. Okay. So here we go. So we are back here, NQH 1819. And we got 15 and we got 2. We need 15 and we need 2. Okay. Yeah. So we are late. You know, we got a reaction to the average already. It dropped to 46 from 50 something. It went. So if any, we should be in the trade. But yeah, we're not going to be able to enter, guys. Let me very quickly before we end the session, I'll look at the S&P in case the S&P is giving us a setup that we could still execute. I mean, you can see the power of the average, isn't it? You see that right here? But yeah, we don't have a UFO which I could use to plan a trade. Okay, so guys, since we reached the top of the hour and we are supposed to finalize the session, so we'll have to finalize it with this fun trade session crash that we just had when we right-clicked and activated chart trading, which sometimes could happen, and it happened to us. Chris Ward has a question here. It sometimes helps when you turn AutoUFO, then put a trade, your CPU is struggling. You have a point. You have a point, Chris Ward, and especially in my case, you know, I said that a few times in prior sessions. You know, I'm streaming video. You know, I'm taking this session, I'm sharing my screen and streaming that in the form of video. in 3 places at the same time, and this utilizes a lot of computer power. So you have a very good point, Chris, and that's a good advice, good technical advice for all of us in case you have multiple things running on your TradeStation. It's always good to turn them off and then activate chart trading, because the initial process of launching chart trading, let me do it. So turn off the UFOs. When I right click and activate chart trading, you will notice that even though I don't have the UFOs, take a look how it takes a little bit. Okay, it takes a little thinking. Okay, and then it came in, and that thinking, I'm getting a little technical here. Hopefully you're okay with that. But that thinking, when you look at computer power and stuff like that, it brings it up to 100%. It's like a peak of computer power going all the way to 100% when you activate chart trading. So that's a very valid suggestion, Chris, and thanks for that. Okay, but anyway, yeah, Mark, good point as well with your comment. Not trade for you. Mechanical, rule-based. That's the way to do it. Okay, everybody. Hey, see you on Thursday, my friends. We are done for today. Very quick, get together, trade with UFOs. So if you click in here, I would understand or expect that all of you have seen this website before, isn't it? But you can see here, next session will be March 7, 9 a.m. US Eastern Time. We'll be doing longer term, and then back to sharpening on Sunday, March 10. Okay, guys. So looking forward to spending time together, having fun together, and taking advantage of those markets that we love so much. Okay. One last comment. Not many of you guys, based on what I see, when I compare all of you that are subscribed to the Get Together sessions, which you are a bunch of people. When I compare that with our subscribers in the YouTube channel, our subscribers in the LinkedIn channel and Facebook, the numbers are quite different. And I would like to suggest, and again, this is just a suggestion, so take it as a suggestion, but I would like to suggest that you subscribe to the YouTube channel and the Facebook pages and all of that, because we're going to be implementing many things that will be communicated via social media. It's a little bit of, if you don't mind me to use a strong word, it's a little bit of a pain to be sending emails and stuff, and it's much more convenient to be communicated via social media tools. And if you are not subscribed, then you don't get the notifications, and we're going to be lacking communication. So I would really like all of you guys, and if you're watching this recorded, you too, to be connected with us in a more modern fashion that only email, so we can be more efficient with communicating, guys. Okay. But anyway, guys, pleasure to be connected with you, and see you on Thursday. Okay, take care, and very good job with a lot of interaction today. I love that, guys. Okay, be ready to do that all sessions, guys. Okay, and not only to do that. Okay, get your TradeStation ready and ready to click the button with me. Okay, we missed that trade with the NQ, but it's not always going to be like that. Okay, so be ready to trade. See you soon, guys. See you on Thursday. Bye bye.